another episode of the TAF Hub. My name is Mariama Kuli, and I am here with the host himself, Mr. Mustafa Njai. Welcome.
Thank you, Mariama, and yes, welcome to this episode again. We are here to continue with Dr. Jabbie, Dr. Saikou Jabbie, who is the first Deputy Governor of the Central Bank of the Gambia.
Also, the other importance of real estate is to control this money laundering and terrorist financing, because most of these money launderers find many ways to clean their money. They brought this money to our part of the world, not to stay, but as a transit point. So if you put it in a bank, the bank's compliance officers also will always get it, your source of fund, your this, your that, a lot of questions. So they go into real estate, put it in there. The next time people buy it also, you have your other clean cash, you now push it somewhere, that kind of thing. So we try to also capture. We have a framework for money laundering and terrorist financing, a framework for it. And FIU, the entire financial intelligence unit are here. We also serve as chair of the board. And also we have the AML CFT unit also at the Central Bank that also works with the financial intelligence unit to ensure that across sectors, at the insurance sector, at the real estate or bureaus or banking sector, microfinance, we try to handle money laundering issues as much as possible. You can no longer go to the bank and deposit money freely without being asked. Maybe you will not be asked, but they mark it as a suspicious transaction. Give it to FIU to further investigate on the matter. Or you want to pay even $1,000 in some banks today, but like my child's school fees somewhere, you have to bring the receipt with the invoice from the university. This is what I'm paying against. Somebody's medical care in UK, you have to bring that hospital bill, the kind of thing, invoice. That is what I'm going to pay. You cannot just pay, oh, I'm sending money somewhere just like that. No, no. The financial sector globally is so much being delegated that every bit of transactions has to be asked, and it has to be very clean. If not, it will just hang there. It will not reach the other end. It will not reach the other end, really, because of the same issues.
So, Doctor, again, I mean, here I'm sitting here not only as an interviewer, but also as a player.
Yes,
as a developer. And this sector, we contribute a lot to GDP.
Indeed.
And solves the one of our basic human needs is shelter.
Sure.
As a developer, our role is to deliver the houses well built, or as agreed with our clients.
Yeah, sure.
Now there are different players. I mean, government with its different arms, have different roles to play.
Yes.
Like the Ministry of Lands and so on, so on, so on. So when you sit here, we look at financial problems. Financial, really, as the parent bankers of the bank.
Yes.
Of the Gambia.
Yes.
How do we address financial problems? But looking at it from two ends.
Yeah.
As you rightly said, as a developer, as a real estate developer, I need construction finance.
Yes.
I need to build the houses. So in building the houses, not always do I have all the money to just come and build.
Sure.
So I need to borrow.
Yes, sure.
So that is a problem for most developers.
Sure.
When you borrow, obviously, if interest rates are high, it is passed on to the buyer because it adds on.
Sure.
And then secondly, the other end is the offtake. Because after building, what I do want, as you know, is for somebody to have the facility to be able to buy the houses. Not often do people just have the money to come and buy the houses one upfront.
Yes.
I mean, all over the world, mortgages do work. So you pay a deposit as an equity, and then it's spread. We hope we can one day reach 25 years, mortgages. But as a financial institution, what is your institution, doing about this? What do you think can be done, to facilitate some of these?
That's a good question, really. At the level of the central bank, is the financial institutions like the commercial banks or the other financial tier institutions that lend to the populace, and they have their lending criteria, and reaching those people to satisfy some of those lending criteria, you must come up with a business plan, that kind of thing. That money, what are you going to use it for? They may also ask for your last audited accounts to see your financial capability, your financial wherewithal, the capacity to be able to handle the kind of loan that you are demanding. the kind of thing. And with competition, we have failed banks here now, and some financial institutions that are also lending into the industry. As more banks go into it, competition goes in there, this will bring the interest rate down. And I love the central bank with the inflation going down. Just recently, just last week, we had our MPC at inflation at 8.2%. But this was going at a targeted level of 5%. So as inflation goes down, we also bring in down the MPC rate. And the MPC rate is plus 5% to be a max of bank lending. Today, the maximum lending you can get from banks is 15%.
15%?
15%.
Sorry,
this was at 17, 18, 21%, and 27%.
You still said MPC for the layman.
Yeah, for the layman, it's our Monetary Policy Committee meeting.
Okay, all right.
MPC, Monetary Policy Committee. We have it every 3 months at the Central Bank. We have it where we assess the entire Gambian economy, sub-regional economy, African economy, the global stage, the economy, to know where we are and look at the fallacy across major international currencies. Our real estate sector, our public sector, our real estate sector is also being assessed, also the fiscal aspect of government and all that. We come up with all that and come up with a recommended interest rate. And that interest rate is the benchmark for bank lending. You see, bank lending should be more than plus or minus 5% of that, 5 percentage point of that. So that is kept at 10% last Wednesday, and 5% of that, 15%. Is the max that you can get. But today, some banks are giving loans at 11%, 12%, 13%, really. Particularly if you are a good customer, you don't have those kind of defaults with them. But as I said too, as more banks venture into the area, because look at the viable projects. As they venture into the area, competition come in there, the interest will come down. That's the business. But if you have 2, 3 banks going into it, not much competition, they are at that liberty to put in that within, but it has to be within that 15% interest rate. If they are 16%, they'll have a problem with us, really.
So let me just tell you on that, Doctor. So you are saying here now that the maximum interest rate per annum should be 15%. So now, are we saying that if I go to a bank and the bank charges me 16%, what do I do?
Well, I think the bank knows because we review their records, we review their returns, and apart from their quarterly returns to us, monthly returns to us, we are also on the ground there every year once.
Okay.
That's the policy at Central Bank. When I assume as Deputy Governor, first Deputy Governor, that I made that the rule. All departments must inspect their institutions once every year. That's the mandate of Central Bank. We have to be there. You cannot be absent for the whole year. So when we found that contrary, I mean, there are penalties for it.
Well, I'm just asking as a layman.
Yeah.
I walk into a bank, and now I have been charged 1% or more above what you are saying. What do I do?
Maybe for those possibilities may be very slim, but they may charge you for others, like other charges and fees here and there, processing fee there, or whatever fees there, whether that you put together maybe 60, 70%. But the interest charge on the loan proper cannot be more than 15%. They will not try that. There are compliance guys there, there are compliance officers there, there are other guys there who are very much looking into that, really.
Okay, it's good to know.
Wow, interesting. But then what challenges do you face as a financial regulatory body? I
can inform you that we are very much on top of our mandate, really, as a central bank. Mr. Mboob knows, and most of the central bankers know, the commercial banks know, and other financial institutions that we regulate, the insurance, the bureaus, the microfinance institutions, really. And as I said, now we are doing it every quarter in terms of not only 1 year being on the ground, we call it on-site. Once in a year, we are able to accomplish it for the past 5 years. And every quarter, too, they send us their various returns on deposit, on loans, on capital, on whether your capital is right, on loans categories, on loan provision, on loan defaults. First 20 largest loans, first 10 depositors, they send us very different kinds of returns that we review at the end of every March, June, September, December. So we review that. Even before we are on the ground, we are able to assess your financial situation. So if there are any other things that are going wrong, we raise yellow flags, we write letters, we invite management, we invite the board, and we make close monitoring. Worst case scenario, we may even send our staff attached to the bank or attached to the financial institution. That the public would not know. But we send that guy there with that mandate to bring back on track those financials that are seemingly going off track, really. And they have that veto power, just like the US having in the Security Council. that they can veto even the board decision of that financial institutions. Yeah. And though our staff needs to be in close consultation with us leaders at the governance level to give him that go ahead, the kind of thing. But if he sees that such a decision could be injurious to the financial institution, then we will give him the go ahead to implement. Really. So we are on top of it. There's no challenge for us. No financial is standing in front of us as a challenge to regulator. No, there are no untouchables. No untouchables. There are no untouchables, really. No untouchables, really.
Well, it's good to hear that you have no challenges.
As you said, we are bankers bank, really.
Yeah.
No restrictions ahead of us, really. We are also, we have to also know that regulation is not only stick, whatever, but we also have the carrot. We are a development institution too. Even in the developed world, after the Second World War, most of central banks becoming developmental, the kind of thing. And I'm coming from a development finance background. I did development financing at my master's and PhD level. We don't only carry the stick. Our colleagues will know, maybe those here too, that we are also developmental. We go to promote a lot of initiatives that the banks are taking. Because some of the new products, before they launch it, they come and make a demo to us. And if you see the impact of that to the economy and to the clientele, the adding to the GDP, added values also, and keeping the risk profile very low, we give them the go ahead. Go ahead, really. Many construction companies, the hotel industry, increase in hotel industry now and all that, they go to the banks, borrow massive, and we clear them because we understand the impact at the end of the day. Quite apart from tourists coming in there, the jobs that you are creating, the added infrastructure you are coming up with, the added tax revenue you are bringing in, all that, the kind of thing. I say, coming to my table, I don't have restrictions for that, really.
Great. It's good to know. Because development, finance is absolutely necessary here.
So central banking is not all, we have a heavy stick, that kind of thing. We go developmental, that kind of thing. Massive.
That's encouraging.
Really. Because our part of the world, structures are low, many other constraints here and there, the kind of thing. You want to carry only the stick. At the end of the day, there's nobody you will beat with the stick. Because they all go down. Yeah, so you have to be developmental at the other side too, really, so to make a way forward.
So even with COVID-19 hitting the world financially, it's still not affecting you guys in any ways in terms of regulations?
Well, in November last year, I represented the central bank at the governors meeting in Nigeria, Lagos, where all the West African governors, central bank governors were present. At the time, my governor traveled. I represented him there, really. And it's as if that was a tete-a-tete. The kind of regulatory approaches we are making here were the same kind of approaches in Nigeria, Ghana, we are doing, this kind of thing. We all know this is a global pandemic. It had hit major industries, like the hotel industry. And this hotel industry have loans in the bank that no tourists are coming, and you say they must pay. They must pay. How can they pay, really? So what the kind of approach we had was, it has to be bottom-up. The customer, the hoteliers would have to go to the bank. Hey, I borrowed this money from 2 million, 5 million from you. The monthly installment is, say, $500,000 or $100,000, $200,000 every month. But now, I don't have even the tourists in my hotel. Yeah. There's no income coming in, so I cannot pay that loan. So I want, let's say, 3 months, 6 months repayment period, or like payment break. After 6 months, I start paying again. Maybe by the time some of these things would change a bit, that kind of thing, I'll be able to raise some income to pay. Then the banks would extend that to central bank. And we approve. There will be no payment break will be there for 6 months, and there will be no provisioning. Because if you provision the bank, they don't have the money from the customer. It was not deliberate that I don't want to pay you, or I can't pay you, whatever. But the customers are not paying because of all what we know, right? So there will be payment break for that period, and there will be break in provisioning too. So the banks will also not be at an undue advantage to be provisioning that will affect their capital. And at the end of the day, the banks will go down, have those kind of problems, really. So we have that arrangement. Some customers may say, I can pay the interest. If the principal is 200,000, the interest is 25,000, I can pay the interest during the COVID. Give me 4 months break after I start paying the principal. You bring it up to us, we clear. Some even 6 months ended, but the COVID is still around, no tourists coming. We want an extension, 3 months. We extend, really. So this is everybody's, it's good for every one of us at the central bank level, at the economy, at the bank, at the borrower's level. to go through these troubled times conveniently. So we cannot be very hard on banks that, oh, the money must be paid. If not, you must make provisioning. You must make your write-off. We cannot think. But those sectors that are not affected, like if you're into agriculture, you are into other areas that are not affected, we don't see that very much linkage. Because some can also take that advantage. Oh, COVID. You think COVID is affecting everything. So we say no. Let's look at sectors that are hardest hit, like construction industry, aviation industry. Like if civil aviation had a loan from the bank today, or some other airlines, like, or tour operators, or the travel agencies, that kind of thing. Nobody's traveling, nobody's bringing. And some of those, even COVID, we said there are many negatives, but there were positives.
Yes.
In 2020, we have the highest level of remittance in this country ever. Level of remittance, really. It's almost $600 million. Wow. About 589 million. This is excluding some 10, 11 MTOs and bureaus, really. Because nobody's traveling. I travel to the US annually, twice, April and October. When coming, people give me envelopes. Give it to my brother, my sister. As I landed, they start calling me, come for their money. These are not captured in our database, but they are informal remittances, really. Yeah, but nobody was traveling. Everybody was forced to send through the formal channels. Yeah. These are captured now. That's that revolution we made with the bureaus, to capture their database also. If the bureau has 45 locations across the country, from the system, we can always tell how much of your bureaus are on board your database. Maybe you 5 in Bakadaji, in Chamoy, in Diabugu are not part of the database. We can tell you, hey, these 3, 4, 5 branches are not part of the database. Capture them and bring them up to date. We capture that. We can know that from the system, really. So this helped us so much to capture that, really. And it has been very good to have those data and inform our. This year, we are expecting not less than 800 to 900 million remittance. Wow. Yeah. Today, at the end of July, we had almost 500 million. About $478 million remittance. Wow. Just where school fees payments are not coming yet in September, and Christmas also. These are events that we normally push in remittances, really. So we are expecting to be around 800 to 900 million, if possible, $1 billion, really. That will be massive, really. Wow. And because of that, we are not that much affected by COVID compared to our sister countries. In Nigeria today, there is even a rationing what bureaus can sell. In Forex. In Ghana, we had a shortage of Forex. But because of a high level of remittance, the meeting I attended in November 2020, when we mentioned our level of remittance, they were even skeptical, saying, how we are able to do it? Nigeria was learning from us, really. So these are all helpful. So these are very good institutions. So that's why I'm saying they are important to our economy. Let's manage them better. Let's boost them. So we come with this software to capture it. And all the time we are organizing training, AML, CFT, money laundering training for them, a lot of other recording systems, and the software also we manage. So we are doing fine with them. So we hope if a similar thing is done with real estate sector, we'll be able to really know their impact in the economy, in terms of housing, in terms of job creation, in terms of even the finances that's attached to those financial institutions, those real estate sector. And capturing our GDP, our bottom line will grow. And maybe at some point we are out of this LEC status. Yeah. Really. Yeah.
But just to follow up on that, you mentioned the amount of remittances that increased. Quick question, what is our GDP today? And secondly, the amount that you mentioned on remittances, what percentage of it is on our GDP?
That is 48% of our GDP.
That's 48% of our GDP. Yes. So almost half of our GDP is remittances. Really. So therefore, our GDP is what?
GDP is in Dalasi terms about 61 billion.
$61 billion GDP. And 48% is remittances.
This is remittances, really. And this can further be enhanced.
We'll save that for another day. This will take a whole
This can further be enhanced, really. So if the equal importance is also real estate sector to this economy, if we're able to capture this, organize it better, and have an enabling aspect of it to our economy, imagine where will we be if we are able to capture this kind of data for the real estate sector. Get the right people in the right places. We call it what? Square pegs in square holes, round pegs in round holes, that kind of thing. People having a wherewithal, that kind of thing, are in there, so they can be there protected, play the ball by the rules, that kind of thing. Not, there's so much profit here. Everyone's rush in there, you swim there, dirty the water, and go out at no cost. So those that spending heavily in it, high streets here, that kind of thing would have that huge cost to load.
Yeah, Doctor, let me tell you on this one. I usually tell young entrepreneurs when they come to me for mentorship, advice, especially on finance. You ask them about challenges, they tell you, oh no, our biggest challenge is finance. And my advice is always, don't put that emphasis on finance, meaning going to the bank to borrow. And a common saying that I tell them is that banks only give you an umbrella when the sun is shining, meaning that when you need the money, they don't give it to you. But when you have it, they tend to come to you knowing that you have the ability to pay. Sure. Do you agree with this or not?
In fact, the demand for borrowed funds, I think, is secondary. We have the Empretech here that will build the scale first. You build the right skills, that kind of thing. With small amount of money, you can take off. And as I said, no bank will finance a startup. That kind of, you start fresh, I don't have money, go to a bank, they borrow you. You have to use your own funds. For people to look at you as using your own funds, for at least 1 year, you're able to manage your own funds better. Well, if you don't have that chance to manage your own funds better, you want to have somebody's funds given to you to manage it. How efficient are you going to manage it? Effective are you going to manage that fund? Really? So have the skills, your mindset, everything ready, have a professional area that you are so much interested in to go in, whether you feel or not or whatever, you have interest to go into this area. If you have any complementary funds, you must have your equity first. Then, as I said, go with that. Then after, you can have other complementary funds added to it. I wrote many journals on access to finance and also books on finance. At the initial stage, you must start with your own funds, your family funds, your friends' funds here and there. As you grow up, you go into microfinancing. As you grow up, you start with the low cadre of bank loan. Then gradually, as the repeated lending comes, you grow your volumes, There's a story here at Tangier here. One of the crew to a boat going for shipping used to go there, was paid not by cash, by in-kind. Depending on what you catch, they come, they divide into three: the boat, the owner, and the crew. The crew, if it's 3-4 people, you share the fish you have, the stock you have. He sells some, takes some to the house, food security and all that. Really, when financial institutions started coming in there, he had his own funds. He was able to get a net and borrow a boat from a family member. And the financial institution gave him money to buy the engine, the engine boat, really. And starting going 3-4 months loan. 3 months he paid the loan, 20,000, he paid the loan. Repeated lending, at the end of that 3 months, he had 50,000, had another boat. Gradually, 50, 100,000, 500,000. At some point, he was accessing 1.5 million.
Wow.
Really. So it starts slow. Yeah. You want to start up, you collapse, really. You start slow and grow up. Grow up, really. And as I said, banks, these are shareholders' money. These are public deposits money. It's not for free. They have to know where their money is going into. I don't blame them. I don't blame them. Though maybe sometimes they may be very stringent or subject it to a very stringent lending criteria, business plan, whatever. You talk to some entrepreneur business plan, he doesn't even know what you are talking about, really. But I think the hard info, they call it hard information, that's the bank statement, the other business plan also, could be linked up with they call it soft information. That's the credit officer visiting the entrepreneur at his office to know what is in stock, what is the selling, what's the demand for his products here and there. To add it with that kind of information, then our part of the world will be able to access credit. But if you want to rely on only very formal information, many of us people are not even formally, they don't have bank accounts, they don't have whatever. You want to seek them to bank statements, they may be excluded. And for us, personally, I'm from a financial inclusion background. Even today, 3-4 a.m. today, I had a conference in Malaysia, Kuala Lumpur. I presented a global fintech promise on enterprise finance, really. I was there 3 to 6 a.m. Instead of 6, I went to bed. Wow. And I think I was late for this conference meeting.
Sorry.
Really.
That's good. We're
not but that's key. That's key. That's key. We must get our priorities right. It's not that funds are lined anybody. You walk in there, take money and go. They are sitting on people's money. Really. And they are regulated. Really. There are compliance officers there. There are internal auditors. There are external auditors. It's not only Central Bank oversight on that. A lot of others, you see? And these all reports go to the AGM meeting. If they found something wrong, the whole management is on the fire there, really.
Well, Dr. Jabbie, thank you so much for your time. But finally, before we let you go, the real estate sector as a business requirement or guidance would always need support. Now, what word or advice would you have for the parties that are involved?
Well, I think that will come up, as I said, negotiations are going on for regulation, and this will be able to guide them better. I think it's just for them to be better in their business, and also for government to have an oversight on them, be able to know what is required of them, and be able to get them formally registered, your memo and articles of association, who are the members, who are percentage holding in this company, what do you do, what's your capital, come up with even capital requirement, right? A mandatory deposit, people paying their plus, they don't have it, they can come for a refund, no troubles, really. I think that will get them much better organized, that kind of thing, better organized to be able to do their business without any hitches, that kind of thing, and people who are also benefiting from their housing schemes can also go to sleep very well without difficulties of, I finish payment, I don't get my title document, the lease title document, or you give me one location somewhere, and the next time you tell me it's moved to another location here and there. These troubles are there. So I think that governance aspect of it needs to be ironed out, and whoever is going to handle the regulatory part of it, I think this is key to handle that, because the real estate sector, we must emphasize, is very important for our economy, not only addressing housing poverty, but also bringing the quality of life of our people, and also the jobs it's creating, the housing is being built. That's going to add to the infrastructure of this country, and it's just going to move further and further. Maybe with time, we are not to have this bungalow, this thing. We may have this condominium later in the future, where people will get the flats and all that. In Malaysia, that's what is there. All through my time as a student, I was living in a condominium, really, renting there, or some people are there with their families also. So what is supportive to your economy, you can only support it. You can only support it to make it better, really.
Thank you so much.
That's my view about it, really.
Great. Thank you so much. And I'm sure this is not the last time that we're going to have you here.
I'm available.
We'll be knocking on your doors
so
that we can educate, enlighten, the population on much needed advice within the sector and beyond.
Indeed. It's grateful to be here and to answer to your call. It's all Gambian, so if I have that I can add value to it, I'm open, I'm free. With all my busy schedules, I'm free to slot them.
Thank you so much, Dr. Jabbie. This was very educative, as always. Till we come your way on our next episode on the TAF Hub, thank you, and do subscribe on our YouTube channel.
TAF Africa Global presents the first eco-smart city in the Gambia, the TAF City, located between Gunjur and Sifo. It is 30 minutes away from the Banjul International Airport. At TAF City, you will be able to live, work, play, and shop in a healthy multi-purpose community. This vibrant urban environment will meet your everyday needs with commercial, business, recreational, and other complementary services to increase the value of your home. With up to 5,000 units of affordable homes on a 500-hectare land, TAF City will be twice the size of Banjul. Prime location, stunning properties, and amazing discount of 20% for the first 50 buyers. Make an appointment today to secure your property. For more information, please call +220-776233 or +220-376-2333, or you can send an email to info@tafafricaglobal.com. Better still, visit our office at Madiba Mall, Bruford Gardens Estate. TAF City, a green and smart city accessible to all.